All right, so prices went up in February, so did overall inventory, and in this video, I'm gonna be breaking down the stats for both Fraser Valley and Greater Vancouver. And I apologize for wearing a hood in this video, but I need a haircut and look stupid. I'm that 𝐎𝐓𝐇𝐄𝐒. I talk about Canadian real estate and my local market of Abbotsford and the Fraser Valley. If you're into that, subscribe to the channel. Like this video. If you want to chat, I got a link in my description that goes right into my calendar. Here we are in the stats center. Starting off with the Fraser Valley Real Estate Board, we are looking at HPI, which is the home price index, which is, in my opinion, the most accurate way to see what happened with prices, although it is a lagging indicator. So for all property types, condos, townhomes, detached combined, we went up about $8,000 in the Fraser Valley. Detached went up about $19,000, not too shabby. Apartments, 539 to 546,000. You know, not too far off the peak, less than 10% off the peak for apartments. And then townhomes up 6,000. Still quite a ways off the peak. Same with detached. Look, detached, we peaked out at 1.771. We're down almost $300,000 still in the Fraser Valley. So inventory went up. However, that is characteristic for, this time of year. You can see inventory tends to go up in the spring. So we are starting to see the spring market now. And then we can see sales again upticking for the spring. We're at 1180. So how does this compare to previous years, right? So we're at almost 1,200 sales for this February. Last February, we were at 857. So that's roughly, looks like a 30 to 40% increase. 2022 February obviously was a pretty good year. So that's, 1,700 sales. We're well below that. 2021, look at that, almost 2,700 sales in February 2021. So like 2.5 times busier market in 2021 than in comparison to today. And then we have 2019, obviously that was a slower market, 919 sales. 2018, 1,300 sales. So even 2018 was still a little bit better of a market than what we currently have right now. And then 2017 was also a little bit better. 2016 was much better. Now keep in mind, the amount of realtors and the overall population of Canada was like quite substantially less than what it is today. So sales per capita was much, much higher. Even at only, an extra 150 sales in 2017, if you break that down on a per capita basis, like sales per population, obviously 2017 is going to be significantly higher than it is today. So let's go look at the GVRD now. Starting with prices. So all property types, again, we went up 22,000. Detached went up about 35,000. Apartments went way up 19 grand. Now check this out. So we're at 770,000. If you compare that, we're pretty much at peak prices for apartments in Greater Vancouver right now. Pretty much at peak prices, which is crazy, right? Townhomes, we have townhomes up almost 30,000. And we're still a little bit of ways off the peak, but not too far away, to be honest. We're only about $50,000 off the peak, less than 5%. Small bump in inventory, 9,100 listings. Sales, 2,063. So is the correction over now that prices have started going back up? Well, it could be. And, on a fundamental basis, the longer we are in a correction, the less of a chance there is of prices or something really bad happening, right? Because the longer we're in this correction, inflation is deflating the overall value of the dollar, meaning that the overall price of homes is actually getting cheaper as it is already. So for, the prices to stay flat and, inflation's doing its thing, if prices come down at the same time, it's almost like, how do I explain this? It's almost like a bigger correction than what's already taking place, because a market can correct by time or it can correct by price, right? So even if the market just did nothing for 5 years in a value basis, that would still be a pretty big correction because inflation is going to devalue the overall price of that home over those couple years that the price has stayed flat. So I want to bring this to your attention, right? So we look at the chart here, right? We peaked out May of 2022. We then corrected for roughly, what is that, 5 months, 4 months? And then we started going back up again, peaking out in July. Again, we came back down, right? So overall, in this correctionary phase since May 2022, it's been, we're coming up on 2 full years, basically. So if we look at 2017, we have what looks to be like an almost identical chart, right? Here's that peak. This is the first peak. Then we came down. Here's the first trough. Here's the first trough. Then we came back up. Here's this peak. Here's this peak, right? Then we came down. Then we started going back up. Then we came down. Then we started going back up. And then we topped out again in March of 2018, where we then sold off basically for over another entire year. So something that could be possible is after the spring market, you see us roll back over, and they actually came lower on the second sell-off, lower than that initial trough, right? So we came all the way back down beneath that trough. If we were to do something like that, that's going to put us at prices all the way down here at like $1,021,000 from where we're currently sitting. Is like, that could be roughly a 15% correction. Now, is that going to happen? No, I'm just saying that it's possible, right? If we just look, it wouldn't be out of the ordinary for Vancouver or Greater Vancouver to behave that way, because we've done that in the past. So just wanted to bring that to your guys' attention. Now, that being said, going into the back end of 2024, we do have a lot of positive things happening. Inflation is below 3%. We're talking about cutting interest rates. And in the worst event, if real estate ever did crash, let's just say it crashed, we saw a 20% haircut just like that once again. We have a lot of tools to now correct that, right? Like, we have 300 or 400 basis points worth of interest rates we can play with if the market crashed. You guys don't think the Bank of Canada is going to cut rates 200-300 basis points if the real estate crashed? They probably would, with inflation under 3%, right? We can extend amortizations to 40 years. We can get rid of the stress test. We have a lot of tools at our disposal to, play with the market to prop it back up if real estate were to crash, right? Back in 2022, when inflation was at 8%, all they could do was pretty much let real estate crash. There's nothing they could do to prop the market up at that time. But today we're in a lot different position. 2 years later, real estate really hasn't done anything for 2 years now. And obviously inflation's been running hot over 3%. So what has that done to the actual valuation of Canadian real estate? Well, there's already been a pretty big correction that's taken place, even with prices staying pretty much flat, just because of the overall value of the dollar has been degraded. I mean, look at Bitcoin, right? Bitcoin is not at all-time highs right now, but it's at all-time highs in Canadian dollars because the valuation of our dollar has degraded so much. So anyways, that's what's happened in the market in February. Could this be the start of a new 10-year-long bull market? Well, it definitely could be. We'll have to see what happens.